Always helps when you put the audio on. Yes, these stock market live are live. Hey, thank you so much for joining me. Well, the market took a little bit of a pause yesterday. Hey, Percent, how are you? So what we're going to do today is we're going to break down Facebook stock, whether I keep calling it Facebook, FB stock, Meta platforms, and whether or not their big bet on the metaverse is the right thing for them to have done. How the Meta platform business has evolved over the last couple of years, specifically with the changes to the iOS updates that are blocking the tracking. I know a lot of people in the online digital world who are on the marketing side of things, and it's created a giant hole for people for not be able to tell who's doing what. So we're going to break down FB stock, Meta platforms. I keep trying to make sure I say it correctly. We're also going to teach something today. We've spent a lot of time recently talking about what is called the bullish echo, and we have a lot of stocks recently that traded into a bullish echo. And I'm going to describe what it is. I'm going to show it from the perspective of the optimal entry and how the bullish echo plays into a new trade. I saw a couple of people type in Facebook, which exploded yesterday. Some really good stuff on the day trading side of things yesterday in Facebook. In Tesla. I'm kind of going back and forth because I want to make sure I give you something right now. We did a video yesterday, which was a compilation of two different day trading strategies, and it was more about using the market internals. Absolutely a must know if you are day trading right now. So I'm actually going to post the link to that in the comments right here. So if you didn't happen to have a chance to watch those two videos yesterday, make sure you watch that after the fact. It's one video, two videos combined. Today's focus is going to be on Facebook. I keep saying Facebook. FB Meta platforms and the metaverse bet that they made. And we're going to just look at the price action because actually it's forming a pattern right now to me that it looks like it's bottoming out, and we're going to start to build a scenario. Now, the big reason I want to bring this up is that you eventually have to get to the point when you're trading where you have to see things beyond the basic chart pattern. And if you remember a couple of days ago, we talked about sometimes when you're looking for something specific, it's easy to put that trade on. But sometimes when you expect something to happen and it doesn't happen, that is also a signal. So we're going to map out FB Meta platform stock price action right now, how we plan to trade it, what we need to look for. We're also going to do a deep dive into electric vehicle stocks, obviously Tesla at the top of that list, and define what it means for a stock to be in a bullish echo and how to trade that bullish echo. It's a really interesting one because we get a lot of people in our community who are swing trade only, have a full-time job. And obviously that's probably 98% of the people in the stock market. We're going to talk about how to look at a stock that is obviously bullish, but not necessarily a new swing trade right now. And then we're going to break down yesterday's pullback in the market and how that translates into some new ideas. Basic material stocks have actually been pretty strong as well. The big question on the board is, why aren't tech stocks going down? We talked about it on Monday, actually, if you remember, that we said higher interest rates, not good for tech stocks. They should be going down. I have an answer for why they're not going down right now and how that plays into what many people have perceived the bad news that Jerome Powell said the other day when the market took a big hit intraday. I believe it was on Tuesday. So we have a lot to cover right now. So I'm going to just do a super quick intro and stick around. I'll be back in just 1 second. Okay, so thank you so much, everybody. I really appreciate you being here with me today. I love doing these stock market live streams. Obviously, everything we discuss here is for educational purposes only. It's up to you to make that final decision. I just want to make sure I say good morning to a couple of people. Hey, John, good morning. Steven Menzel. Steve's been a beast as a new member of our boot camp. Thank you so much, Steve. Really appreciate it. Hey, Scott. Good morning. Good morning. How's it going? Minvai, always a pleasure. Good morning, everybody. Okay, so the big thing I want to talk about is we're going to start out with FB Meta platform stock. I got to make sure I keep saying it because the same way I keep calling Square SQ stock Square, it's not Square anymore. It's SQ Block Inc. So I just can't get my head around it. So we're going to jump right on over to the charts. We're actually going to pull up. Actually, let me share the screen. We're actually going to pull up the rotation that we've been looking at for the week, and then we're going to go straight into. Let me actually get off the screen there so it's easier to see. This is the rotation coming into the week. So you can see over the last 5 days, pretty darn awesome. The month was not fantastic, but it started to improve dramatically, and we maintained that bid, which was pretty amazing. Look at the all 11 sectors performing well heading into Tuesday. And I just want to give a quick explanation of this. What we're looking at is the end of day rotation heading into the next day. So if it says Tuesday, that meant going into Tuesday, not at the end of Tuesday. Because what I'm doing is I'm prepping our community to do a deeper dive into these sectors had bullish order flow over that time period, then go into the stocks and industry groups within that sector to find the best stocks to buy now, which have good order flow. So I just want to make sure that when you get this, and by the way, you can get a copy of this inside of our Facebook group. If you want, you can find that link in the description. You go into the Facebook group and then go into, it says guides, and you'll get a template, a copy of this template. So anyway, as we're going through, you can see that the market has stayed strong, but we have one member of our community, Dilip, who does these kind of really deep dives into rotation. And typically speaking, when the market is all green like that, we tend to get a little bit of profit taking. And remember how I said before that you need to just take it one step further. You need to make a little bit more distinctions on what kind of follow through you expect, which again is going to take us into talking about the bullish echo today and the optimal entry. I just want to give you a little bit of a insight into what I see with a lot of people having done this for a while now. Again, if you don't know, I had 2 trading firms in New York City. We had about 300 members. So I have been doing this a long time. And I think really more specifically to helping you personally is that I understand some of the struggles that everybody goes through trying to get to the other side of being consistently profitable. Probably the number one problem is being overwhelmed, is trying to look at the market and feeling like there's just too much to look at. And the number one way, the fastest way, beyond a shadow of a doubt, to get beyond being overwhelmed is to know what you're looking for. And that's probably the number one thing that I like to teach in the boot camp. Everything centers around order flow. Everything centers around this is the only thing you're looking for. And once you know what you're looking for, you're not lost anymore. It's when you have when you keep turning the map all over the place, you keep changing the page and it's a different map. That's when the market becomes confusing and frustrating. And quite frankly, I believe to be the number one problem. But once you solve that problem, trading actually becomes relatively stress-free at that point, because now you know exactly what you're looking for. Now it's just a question of getting follow-through. But the big thing we want to talk about today is timing into those trades. There's 2 things that are critically important. Number one is understanding your objective for the trade. Is it a short-term trade or longer-term trade? So that's going to influence your position sizing. So bigger position, perfect scenario. Are you looking to get in and get out quickly and book the trade? Or are you looking to build a position over time? So what you want to write down is time in the trade versus timing in the trade. So time in the trade, meaning you plan on holding it longer. Maybe it's a longer term swing trade or a position trade. Those can be positions where you start out small or looking for feedback, especially if you're carrying overnight positions. You want to work that position as it starts to move in your favor. If you don't do that, then you're kind of forcing yourself to have perfect timing on the trade. And quite frankly, the stock market's just 10 times easier when you wait. You're putting on the first piece of your trade. You're trying to get a head start. And when you get feedback from the market, only then do you put more into the position. The day trading side of things is a little bit different because you could time the trade a lot more specifically because you're kind of down on those micro timeframes and micro setups. So the timing of the trade is a little bit more important on the day trading side. So we're going to work our way over into FB Meta platforms right now and determine the timing of the trade versus the time in the trade. So we're in a much longer consolidation pattern right now in the stock. So actually, I just want to go over the futures are actually up right now. You can see we've actually rallied quite a bit coming off of yesterday's low. This is actually where the market punched down yesterday. I also want to point this out. This is actually kind of funny. Tries to recover from Wednesday's losses. Now, this is actually a pretty big deal. It's kind of like a pet peeve of mine. The market's allowed to go down. It's healthy for the market. If we got the books in the back. If you've read Reminiscences of a Stock Operator, one of the biggest challenges that Jesse Livermore had was getting beyond the point where he was long or he bought stock, and as it was moving in his favor, fighting the urge to get out of good positions on natural pullbacks in the market. They have to be expected. There's profit taking going on. Everybody's trading at different time frames, different objectives. So to see a headline to say that, implying that yesterday was losses, yeah, the market was down yesterday, but pullbacks and pauses are a natural function of the market, which is a little bit different from what we're looking at in FB. But I want to stick on that point just for 1 second, if you could please allow me. These stock market lives are designed to give you ideas of the best stocks to buy now, but we mix in a lot of the trade management stuff. So if you go back into and watch the videos and take notes, which I really hope you do, and catch the educational parts of it, the natural pauses in the market and understanding, is it a pause versus a reversal, is a monster part of trading. Because if you can recognize a pattern by reading the tape that says this is just a pause in the order flow versus something changed in the tape, and now that means I need to move up my profitable trailing stop because something different happened. It might mean you move it up. It might mean that you take some profits off the table and you trail the balance, but you need to recognize when the tape changes. Now, we've talked about this in the past, and we've said that this is happening normally on the weekly charts. So if we go out to the SPY on the weekly charts, this is the easiest time frame to recognize it. And you can see October into November versus what the tape looked like on the weekly charts. So 5 weeks of super obvious buying. So we had a bullish U-turn here. Then it went well bid, well bid, well bid, well bid. And then 2 weeks of melted candles that led to 5 weeks of being a mess. So we are, we're about 12 minutes into the video right now. If you're going to go back and watch this part of the video, watch what we just discussed, because understanding how to manage trades during a pause and how to recognize when the tape changes or when it's obvious. When it's obvious, you got to hold. But when it changes, that means that your analysis of the situation needs to change. That means that your trade management means you need to step up and make a decision. If you're on top of your game, if you're a good trader and on top of your game, you have made those decisions well before you need to make those decisions. And we call that scripting it out. So we're going to kind of tie that over into FB stock and Meta platform and work our way over into the tape. So you can see that the tape was offering mostly melted candles. And you can even tell during October, when the market had a vicious rally, we went up 5 weeks in a row, stock was showing relative weakness at that point. And if you've been watching what we do pretty much every day here now, we've been discussing whether or not a stock is obvious or if the stock is kind of stuck in a box and what that means. And when the market was rallying into new all-time highs, that was actually showing relative weakness. So remember what I said before about interpreting or giving the best stocks to buy now context. The market rallied at the end of December into the new year at or near all-time highs, and FB Meta Platforms stock did not. So right out of the gate, we were seeing relative weakness there, which, again, if you watched yesterday's video, we spent a lot of time here talking about when stocks hold the bid. So if you can imagine a stock pushes up, and again, getting back to the pauses, pushes up and pulls back as a natural function of the market, you look for maybe a Fibonacci level or a moving average for the stock to pull back and bid into. That's a natural part of the market. It pushes up and pauses, and you look for a bid. But when a stock pushes up and goes sideways, it does not pull back. That's what they call holding the bid. So if you could imagine, let's use Ray, for example, Ray from Barcelona. Good morning, Ray. So let's say that Ray has a hedge fund and he likes whatever the stock happens to be, XYZ stock, and it goes up. His buying pressure and a couple of other people are pushing it up. And instead of the stock pulling back, it goes sideways. That means that they're holding the bid, that even if there's profit taking at that level, there's strong buying demand there, which means they're holding the bid, which means they're advertising to buy and absorbing all the stock, and it goes sideways instead of going down. When a stock pushes down and pulls back, that's a natural function of the market. So there's bearish order flow and a rally. But when a stock pushes down and goes sideways instead of rallying, that means now they're holding the offer. So FB Meta Platform stock here went down and then went sideways instead of rallying. So at that point right there, the sellers kept supply on the market heading into earnings, not allowing the stock to rally. They were dumping the stock into that move. Now, it's so easy to see after the fact, right? And everybody says that same thing. Why can't I see this while it's unfolding? I'm going to go back to what I said before. You need to know what you're looking for. If you know what you're looking for, and these are the things. If the market rallies, what should happen? If the market rallies, we will look for stocks with relative strength. That's the first thing. Then you run your second scan, which is now on the bearish side of things, that if the market goes down, if you understand short selling, or maybe you buy puts on stocks that go down, whichever one you're more comfortable with. If the market rallies, good traders create a game plan, put into their tracking journal of, okay, if the market goes up, these strong stocks are the stocks I'm looking to buy. Meta platforms did not Meta platforms did not go up at that point. So you make a note that if the market weakens, I'm going to look to sell short or buy puts on these stocks that are already weak before the market rolls over. So what I'm trying to get across to you here is one of the most important things that I teach everybody who comes through our community. The hard work is in the preparation. The hard work is in before the market opens. So when you go to bed at night, you wake up in the morning, you already know exactly what you plan to do. That's a fact. It's when the market opens and you're chasing price, you're chasing alerts, and you have no idea what you plan to trade. You have lower conviction levels because you didn't do that extra work. So heading back over to Meta platforms, we have seen now the stock push down, hold the offer, and then get crushed, especially after earnings. So the weekly chart told us a little bit more on the tape. Hey, Winston, good morning. So now what's going on in the stock? So now we obviously know that that's the obvious box that the stock is in. So now we have this giant gap fill to here. And again, that's where stocks usually float back to when they have a gap. But now we also have a new box down here. So if you know that when we're working the charts, one of the biggest things we like to do is find the right price. What is the stock doing right now? So we have a couple of different things to uncover here, which is the move from here, the stock breaking the trend here. So this level doesn't matter as much anymore, because what happens is after it breaks any kind of obvious order flow, you let it move after it stops, which it did here on this inside day and that inside day. Now you have your box. So we have the bottom of the box, the top of the box, and that's where Facebook Meta platform stock is right now. Now, it's kind of interesting watching this stock and doing all the game planning that I do at the end of every day. And just to give you an idea, you want to screenshot this, okay? I'm not going to give you everything, but I'm going to give you the screenshot of the game plan heading into today. This is going to take us into the bullish echo, okay? So let me pull this up on the screen for you, and right here. So you can see that out of all of the stocks that I game planned last night, Facebook came into my list as quote unquote other. The reason it came into my list as quote unquote other is because it's now holding the bid. So we're stuck in this box. We have an obvious level here around 217, 218. So it's broke the bearish order flow since the earnings, stopped going down. And by the way, this right here, these 2 days are very significant. And I'm going to tell you why. And again, this is getting to the point where you need to say to yourself what happened and what should happen next. That's where trading, again, I'm going to use the word. I know I'm on video. There's all compliant and everything. This is where trading becomes easier, because you are now looking for something specific to happen. And when what you expect to happen does, you trade with conviction. When you expect something to happen and it does not, you have to sit back in your seat and say, wait a minute, that's interesting. So that goes into your tracking journal. It doesn't necessarily mean we're picking a bottom in Facebook, I keep saying it, Facebook stock, Meta platform. It means that something changed, okay? It means that something changed. So we had that breakdown. We went into an inside candlestick and reversed on heavier volume. So reading the tape, these are the things that you need to uncover. You need to learn this as a trader. So what I passionately hope that you're learning from me right now in this very video is that trading becomes easier and less frustrating when you know what you're looking for. If you know what you're looking for, then you have to put the pieces together. You have to say, okay, this stock is still good. I'm looking to be a buyer. Let me see how close to the optimal entry can I get that. Now, Facebook pushed down, and I'm just going to show you that part of the chart again, right here. I think we can all agree when a stock has this kind of move, pauses, rolls over again, and takes out an obvious support level, that should go down after that. But it didn't. It did the opposite. It broke down, paused, and did not have another leg down like this. As a matter of fact, it had the opposite kind of move. So now over this week, we had bullish move, bullish gap, well bid, well bid, well bid. Now, just to give you an idea, well bid means smart money is paying higher prices and holding the bid. So we're getting back to holding the bid again from one day to the next. Our specialty is stacking the order flow. Stacking the order flow changes everything because now you're paying attention to how long have they been holding the bid? How long have they been holding, paying higher prices? So FB, Meta Platform stock, had a bullish gap, bigger move to the upside, bigger, higher prices. And from one day to the next, they held the bid, paid higher prices, and closed the stock near the high. So we broke the downtrend. Well, actually, we pushed to new lows, did not follow through, broke the downtrend to the upside. So the bearish order flow got broken. That bearish order flow being broken led to a bullish gap, 3 days of well bid, and now a pause right at a breakout level. So that's why FB, Meta Platform stock, went into my list yesterday. I said, we're going to get volatility in this stock over the next few days. It appears that the stock is going to break out somewhere between 218 and 220. If it does, the natural next move for a longer term position trade would be looking for at a minimum to fill that gap. Now, what I want to get across here is that's a trade scenario. So let's actually go back to the chart. I want you to take a screenshot of this so you can hopefully use this as educational for yourself. So when you see this kind of price action, I'm going to exaggerate it a little bit here. You can clearly see this is the box. As we talk about, this was the break of the bearish order flow. After this breakdown failed, attempted to go down one more time, we then got a bullish gap, 3 well bid days, and now a pause. So remember what I just said a couple of minutes ago, that you need to recognize by tape reading what should happen next during a pause. So the game plan that I'm scripting right now, and this is going all the way back to before of what I said, understanding if it's a longer term trade, time in the trade in this case, this is not a short-term trade. I'm going to be looking to put on the first piece of a trade, looking for the breakout above this 218, 220 level. If the breakout follows through with well bid candles. So I want to give you the visualization of what that looks like. So we're looking for the breakout. It's right at this level right now. You can see it's right around 217 and change. So I'm not getting involved right here. It's going to be more around the 218 level. So it has a little bit of room to work. This is what I'm looking for after the breakout. I'm looking for the breakout, well bid candlestick. So the breakout above 218 is going to be the first place I'm looking. After the breakout, I'm looking for well bid and then a pause. So if you could visualize this here, the breakout will be the first piece. This over the next 5 days, pause on decreasing volume, which is actually another big thing. Let me zoom that out a little bit as well. If you know classic technical analysis, and we've been talking about this quite a bit, so I'm going to explain this, then go back to the screen. Reversals happen typically on heavy volume during a pause. So what ends up happening is you push and pause. As long as it's on lighter volume, nothing changed. So the tape is telling you nothing's changed. But when you have a large red candlestick followed by heavy volume and it doesn't move, so a heavy volume pause, that implies a reversal. Now, I want to say this super clear, and this is really where a lot of traders get messed up. That's what typically happens. That's the edge. You get in trouble when you say, I see this, and this is what's definitely going to happen next. Get that garbage out of your head. What we do, what consistently profitable traders do, is they have a system. And the system tells them this is what's most likely going to happen next. So obviously our system is stacking the order flow and tape reading. So when we're looking at these scenarios, and I just built out a scenario on Facebook, exactly what I'm looking to see happen over the next 5 to 10 days and how I plan to time my way into that position. If it happens, I will put the trade on. If it happens and does not follow through, I will simply get out because I didn't get the feedback I was looking for. It's the traders who put all of that together, do all of that work, and then if the trade does not do what they expected, they hold the trade anyway. That's where smart traders get in trouble. So you need to just take that one extra step and acknowledge the fact that even the best ideas might not work out. And I know everybody on this call, this Stock Market Live, can admit 2 trades looked exactly the same. One trade did nothing that you expected. The second trade did exactly what you expected. That's all the proof that you need to know that trading is about your edge following through most of the time, which also implies some of the time it won't. So this scenario that we just built in Facebook, where I just literally gave you the price action I'm scripting out for the next week, I am looking for above 218 for the first piece of a trade. After it closes above 218, I am looking for this to happen next, and then I'm looking for this. Now, this is the most important part here. You can see here where it bottomed out that volume expanded here and it did not go down. Volume expanded here and it did not go down. You can just see the size of the volume. Volume expanded here again. It should have broke down and did not. Volume expanded here again and it did not go down. Volume that expanded on the way up, and now volume is decreasing during this pause, which implies the next move is going to be higher. That's the argument for starting a position in Facebook right now, FB Meta platforms. I'm not going in full share size. My goal, remember, time in the trade as the objective versus timing the trade. Timing is a shorter term trade. You can go with a little bit more position size. That's what I'll do. In this case, I'm time in the trade, which means lower initial position size, looking for the trade to prove itself over time. Then I will look for that push, the light volume pause, and then look for the next move. Does your trade need to be that scripted out? Yes. Yes. If you are struggling and frustrated right now, I will bet a coffee at Dunkin' Donuts that you are basically saying, I'm reading chatter on Reddit. I ran an alert, or I saw it somewhere online, or StockTwits or Twitter, or whatever, and you're not game planning with enough detail. It's not hard, but you hired yourself. You hired yourself as a money manager. If you hired yourself as a money manager, you need to have some framework for expecting to get a return on your money. Otherwise, you're probably going to make a little, lose a little. You're probably going to take 3 steps forward, 3 steps back, and totally tongue-in-cheek. You're probably going to watch 50 different YouTubers and try and do what all of them are suggesting. What my mission is on these Stock Market Lives is to point you in the direction of the steps that it takes to achieve consistency. But the only way you will achieve that consistency is if you follow the same strategy consistently. Consistency comes from your trading strategy being followed, not from predicting. Again, predicting is not necessary. Having an edge means most of the time, and most of the time it works, some of the time it doesn't. Kick out the losers, learn to hold the winners longer. So now I want to take you a little bit more into optimal entry, because this applies to a lot of the ideas that we're talking about today. And we brought this up on the screen, excuse me, quite a few times, where we talked about profit potential. So profit potential essentially comes down to what we call bullish echo. If you are buying near the optimal entry, you can reasonably expect that's your profit target. And based on what the stock normally does, you'll understand what the right risk is and the right initial profit target. There's other ideas that happens here where you still love the idea, but the profit potential has decreased. So I want to get this across, because I'm going to show you a list of stocks that we're going to go over. And again, you could screenshot these, because I want you to learn the difference between I'm expecting a bigger move versus I'm just expecting a smaller move. We call that trading for cash flow. I'm going to use Tesla as an example, Apple as an example, where it's obvious, but the odds of following through to justify a new swing trade or a day trade, but we're going to specifically talk about swing trading right now, obvious, but the odds of following through are less until the next pause. We covered a bunch of stuff here today. So I'm going to show you with the bullish echo stocks and the definition of it. So I'm going to bring that in. And this is the definition. So these are some of the ideas. And you'll see that we have BE, 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 and BE. So here's the definition that we're talking about here. A bullish echo is an obvious long, which means that it has clear bullish order flow. You definitely want to be a buyer of the stock. But here's the key. Too far from the optimal entry for a new swing trade. Now, I'll put that back up on the screen for a second, but I want to get this across. This is going back to what I said before about the second biggest challenge that people have when they come into my private community. Number one is overwhelm. So immediately the first thing we do is we have them watch the stacking the order flow videos, sector rotation, and that kind of thing. Once that foundation is set, then the next part of that is learning to take the right risk at the right time. So there's plenty of ideas that are near the optimal entry. They push, they pause, they meet all the criteria. The market's good. The rotation into that sector is good. Then we go into the industry groups to find the right ideas. The stocks that we just put on this list are absolutely bullish right now. Obviously still buying opportunities, but they're beyond the optimal entry. They've been here, so they now qualify as what we call a bullish echo. Now, the term echo is, if you could imagine, and we're going to show you the charts right now. They're strong moves, but the smart money has paid higher prices for a bunch of consecutive days in a row. And now it's reached a point where it's too far from the optimal entry. So for us, we're looking for that bullish echo for one more day. So if you could imagine screaming and the echo goes, but then it stops. So that's the bullish pressure that we're looking for in those stocks today. So I'm going to give you the list one more time, and then we're going to go over exactly what it means. So again, you want to snapshot this. BE, bullish echo of stocks in the game plan. Obvious buying pressure, too far from the optimal entry for a new swing. So this is what we mean when we say optimal entry. So now we're going to take a look at those stocks and which of those meet the bullish echo criteria. So we're going to start out with Apple. Apple, you can clearly see that the stock has now been bought up multiple days in a row. So I still like the stock as a buying opportunity, but not as a new swing trade until the stock pauses. Tesla, same thing. Tesla is one of the best stocks to buy now as a day trade. That's a big part of what I'm watching. Okay, you see how far it's gone compared to what it normally does. Even if we just go to the recent biggest move that the stock has done, 885 before this pause. And this is actually a good visual. If a stock reaches what it normally does, that's where it becomes a bullish echo, where the day trade still makes sense, but we're waiting for this before the next move. So 885 to 1114. So this move right here is already bigger than this move. That's why it's now a bullish echo. So we would day trade this stock, but wait for it to pause before we look for the next swing trade. So another one is CRWD. And you can see, start getting the idea here. And the last one we're going to talk about is NEM. NEM now is multiple days in a row. So understanding, first reading the bigger picture of the stock market, breaking the stock market down into sector rotation, which again, I showed you that here, breaking it down into sectors, breaking those sectors then down into different stocks in play, creating a list of the stocks that meet the perfect criteria, then going in and making the last decision. Once you have that raw material of ideas that meet the perfect criteria where they consider them to be a buying opportunity, then the last thing you do is, okay, what's the best objective now? Time in the trade because it's about to make its next move versus timing into the trade whether it's a day trade or a bullish echo, we're just on that shorter term objective because it's gone too far, too fast, or maybe it's a day trade only. We covered a bunch of stuff here tonight, and we started out this tonight. My gosh, I'm already into tonight. We covered a bunch of educational stuff but it's foundational stuff to give you the conviction to find the best stocks to buy now, go out to the stock market and feel confidence that you know what you're looking at and you know what you're doing. Never forget this. Confidence in the stock market comes from here. It doesn't come from your ability to predict what's going to happen next. It comes from your ability to create an edge and then follow the edge. That's where trading consistency comes from. It's not from this crystal ball forecasting stuff. It comes from setting your edge and defining what to you has a high probability of following through. Then you take the stuff that we talked about today, optimal entry, well bid, light volume pause versus heavy volume pause, and is the tape obvious on the weekly chart? And that will bring you to your conclusion of which stocks are the best stocks to buy now. So if we kind of finish up today and we take a look at the SPY and look at the SPY on the weekly chart and go over here, if you've been challenged, even going back into December, look at the weekly chart and how it's been back and forth. Look at the weekly chart, how it's been selling pressure. 1 week of buying and then more selling pressure. One vicious move to the upside and now opened and closed after 3 days in basically the same place. So I want to end the call on this. We just went over what the SPY ETF, the S&P 500 ETF has done since the end of December. If right now you are finding the stock market challenging, give yourself a break. I just can't say it any other way. If there's plenty of individual pockets of opportunity, like we've been trading the solar stocks, we've been trading the electric vehicle charging stocks, there's been some momentum stocks, we've been trading the energy stocks, but that's been much more stock specific and sector specific idea. If the stock market has been confusing you, number one, get an edge. There's no other way to put it. Know exactly what you're looking for. Number two, when the stock market is more challenging and less obvious and even bearish order flow, if that doesn't match what you're looking to do, it's nothing wrong with being in cash. I just can't say this any other way. You're choosing as a money manager to put your money in harm's way. Choose to put it in harm's way when it's obvious and you expect follow through, not simply because you want activity. Minimizing and getting rid of those ideas that don't make sense or don't match how you look at the market. And we just saw the market's been very challenging for the last 2.5 months. If it doesn't match the way you look at the market, stop trading. Be in cash. Trade maybe a little bit shorter time frame. Get a lot more sector specific. But if you found it challenging, everybody has found it challenging for the last 10 weeks. Do not give up hope. Maintain your positive attitude that you can do this and just work a little bit harder on defining what it means to you that the stock market is obvious, and then only take those opportunities. Obviously, my edge is stacking the order flow. We touch on that a little briefly, and then the part of reading the tape that makes the decision of whether or not there is a trade or not. Covered a lot of stuff here today. I just can't thank you enough for being here with me. If you found this kind of stuff valuable, please do me a favor, hit that subscribe button so you get updates. Watch this video again because we covered a lot of stuff that you want to take notes on. And if you got some value out of this stuff, please do me a favor, hit that like button and definitely leave comments below in the video, in the comment section. If you want to get the template of that spreadsheet that I showed you, click the link in the description and go over to our free Facebook group, and you can find that under the section called Guides, and you can download a copy for yourself as well. All right. Have an awesome day, everybody. I'll speak to you soon. Thank you so much. I really appreciate your time.